Did you guys see this? Like I mentioned it just in passing there, but did you guys see and follow like the whole BlockFi FTX
A little bit,
deal and
yeah.
buyout?
Yeah.
I just thought it was so interesting. I mean, the whole like story of it is actually not super complicated because basically, they were taking in money from clients, and they were loaning it out into what is a super attractive loaning market for crypto assets, and so they were generating a great return on that, and they were basically passing through a high return to their customers, and most of it was like over collateralized loans, meaning there was a lot of collateral in the form of Bitcoin or other crypto assets for every dollar of a loan. And that's great, actually. The challenge is these are super volatile assets. So over collateralized is good until something drops 60%. And all of a sudden, the over collateralization is not super helpful. And so, generally speaking, what happened was there was, a couple of these hedge funds that got liquidated and collapsed, like ThreeArrows Capital. And these places like BlockFi or like Voyager has been another big one, got smoked by losses and had to take pretty dramatic actions to avoid being completely bankrupt and losing client funds. But the thing that I found so interesting was like, so that business was valued at what, like $4 billion
Hmm.
or something last
Yeah.
year. FTX is now under a definitive agreement to acquire BlockFi for like, I don't really care how the CEO positioned it, with the revolving line of credit. That's not really enterprise value. It's not like buying the equity, but like basically for up to 240 million or something like that. It had been reported that it was for 25 million, which I imagine is like the low end of what it could possibly be if everything goes to hell. But it's pretty remarkable that you can have a business, raise money at a $4 billion valuation, and all the, frankly, like the employees who came on and got equity at that valuation, and have it literally be worth, basically nothing, right? Like pennies on the dollar from that deal. It's just like, it's a little bit shocking just on the surface of it.
Yeah, I totally agree. And I think I mean there's just like so many lessons and implications from all of this. Um like one thing that I'll call out is like I think it all gets conflated together in the news media and in the minds of like the broader like retail investor market. But I would distinguish between these like centralized companies like BlockFi that are built on top of crypto assets, but really like kind of building a proprietary business around that, where it's lending money to
Hmm.
actors and institutions that aren't super transparent to the end users and so on and so forth, and exposing themselves to a lot of risk. I would distinguish between that versus like the world of decentralized finance or DeFi, wherein things are very much transparent. It's all on chain. All of the smart contracts are auditable. Users know
That
how
is
the
a very
mechanisms work.
That's a very important point that you made, because I think I saw it on Twitter somewhere. You guys might have seen it, but like, so BlockFi is like centralized finance. Voyager is the same way. There's like a single point of failure in those
Hmm.
systems, right? And like the equity that the value that was lost from 4.6 billion or whatever it was to the deal pennies on the dollar. That's like Tiger Global and Bain Capital. Like, it's not people. And client funds are actually going to be protected in this deal with FTX, which is fantastic. But the point you made about DeFi, like, I think the biggest protocols like Compound or MakerDAO, they actually didn't experience any of these massive
Correct.
issues in this
Yeah.
rundown. They
Yeah.
actually operated and functioned quite effectively with this massive drawdown, which is an important point for people that question DeFi and the merits of it. I think there's plenty of reasons to question it, but this probably isn't one, actually, because it seemed to function well in what was a massive drawdown.
Exactly, exactly. All of the DeFi protocols are still working. They've been incredibly resilient during this period of
Hmm.
broader turmoil. And I think it's really important to note that, because in those instances, in the DeFi world, users know exactly what is happening with their funds, how it's being pulled, um, what's going to happen once they deposit their funds into a lending pool, etc. Versus for something like BlockFi, when users deposited their funds, I think they were just messaged the interest rate, and they probably had no idea that it was, ultimately being, sent to 3AC or whomever else. Like there is a very clear distinction between those two worlds of centralized. I think it's called C DeFi, like centralized DeFi versus actual DeFi. So I would be very clear in drawing that distinction.
Yeah.
DeFi is still working as expected and continues to like come along. I think, unfortunately, like it does get conflated together in the minds of general consumers. And I think in the short term, this is going to represent a headwind to broader consumer adoption, unfortunately, because I think broadly speaking, like most normal Americans are going to look at what's happening right now and just think, oh my God, like crypto is imploding. Like all of crypto under this umbrella of crypto is like not doing well, and things are, getting marked down significantly and people are losing money. Um, I think that that is definitely going to be an impact of it. And then I think what this also exposes is the need for more consumer protections and disclosure of who is um, representing certain projects in a certain way. When people have exposure financially to a certain project's success, having to disclose that, just like they do in the securities world, or
Mm,
just as they do for advertising purposes on social media. Like, I think there were a lot of instances over the last year where people promoted, not just BlockFi, but a whole range of different projects, didn't disclose that they were actually being compensated for that or that they were
mm.
investors, and ultimately, like, obviously have an incentive to talk about it in a certain way that's really positive. And yeah, retail investors ultimately were harmed in those situations, and I think that's really sad. um, and I,
Let
I
me
hope
ask
what.
you on that, because I
Mhm.
think that's a really important point, and it's one that's not often talked about. Um, one of the things that I've seen people criticize about the crypto industry and Web3 in general is like this idea that VCs are like dumping their bags, quote unquote, on retail. And that, they're basically like buying into a token in the pre sale, marking it up with a follow on investment. And then as soon as it starts being liquid and tradable, they're exiting it at a huge markup to retail, who is then kind of caught holding the bag, quote unquote, for any drops in price. My experience personally, I haven't done a ton of like out of my fund, or personally, I haven't done a lot of like pre-sale investing, but I've always seen there be like lockups and vesting periods for at least like the most reputable projects, like the ones that I see big VCs getting into. I've always seen them having like 12 to 24-month lockups, basically to prevent from this happening. Like the same
Mhm.
way your startup equity gets, vests over a certain period of years. Is that a real problem? Do you see people that are actually able to do that, or do most of these projects have those type of lockups?
So usually, I would say in the deals that I've been a part of, lockups are very, very common, if not
Yeah.
just universally present. And furthermore, those lockups are really long, like multi-year lockups.
Hmm.
And for venture firms, I mean, venture firms are structured as usually 10-year funds, where we have a 10-year time horizon to achieve our fund returns. And so people are not investing for a quick flip or to invest on a short time horizon. I think obviously there's lots of different capital allocators out there. There's not just the venture firms, there's trading firms, there's hedge funds investing in crypto. So I'm not entirely sure if all of them are stipulating that there's going to be a lockup.
Right.
Perhaps people are negotiating differently, but I think lockups are really, really important to create that long term
Mm.
alignment.
Yeah.
Lee,
Yeah, I
I,
completely agree.